You have heard it multiple times. Renting is throwing your money away. Buying is the smart, grown-up move, the one that builds something. But I will tell you what the numbers really say in 2026, and by the end of this video, you will be able to make a decision based on your own situation, wherever you live. Because right now, those numbers would surprise you. The advice everyone repeats is describing a United States housing market that stopped existing a few years ago. I spent years in banking, making decisions about whether people could afford the homes they wanted to buy. And the thing almost every rent versus buy video gets wrong is that it compares the wrong two numbers. So let me show you the real math the way a lender sees it, and help you decide for yourself. Here is the mistake. Most of the time, people compare their rent to a mortgage payment. Rent is $2,000 a month. The mortgage on that house would be $2,200, close enough. And buying builds equity, so buy. That comparison is broken because a mortgage payment is not what a house really costs you every month. It is only the first of several costs. When you rent, your monthly cost is basically one number, the rent. When you own, you pay four separate things: the mortgage itself, property tax, every year for as long as you own the home, full homeowner's insurance, not the cheap renter's policy, and the cost that catches people out, repairs, and upkeep. And this one is worth understanding clearly because insurance only pays for the disasters your policy actually covers. It does not pay for things that simply wear out: the fridge that stops cooling, the washing machine that breaks, the air conditioning that gives out. All of that comes straight out of your pocket because when the fridge dies in a rental, you make a phone call and the landlord pays for it. But when you own, that check is yours to write. Four costs when you own, one when you rent. Now, let's put real numbers on all of them. The median American home is right around $400,000, and today's 30-year rate is about 6.5%. Put 20% down, $80,000, and you finance $320,000. The loan payment on that comes to roughly $2,000 a month, and that is the number people compare to rent. But now add the three costs sitting on top of it. Property tax. The average is over $4,000 a year, around $350 a month. Insurance. The full homeowner's policy averages about $2,500 a year, and it has jumped almost 70% since 2021, roughly $200 a month. And repairs. Most financial planners budget this at 1 to 2% of the home's value a year, $4,000 to $8,000. Another $330 a month, at least. Add it together, and the true monthly cost of owning that home is closer to $2,900. Meanwhile, the rent on a similar place is around $2,000. A gap of nearly $900 a month, over $10,000 a year, hidden until you put all four costs side by side. And one more, if you put down less than 20%, the lender adds private mortgage insurance, usually somewhere between $100 and $300 a month, and it protects the bank, not you, until you have paid the loan down far enough. On paper, right now, renting comes out cheaper than buying in all 50 of the largest metro areas in the country. Not a few, all 50, because the cost of owning has quietly grown far beyond the loan payment, while most people are still comparing that one number to their rent. I will not stop there, because renting is not free of hidden costs either. It just hides them somewhere else. And I said I will help you decide, so this matters just as much. When you rent, that $900 a month you are saving only matters if you actually keep it. Save it or invest it. Spend it, and the advantage disappears. You also get no protection from rising rent, and this is the cost people underestimate the most. And it is the one that changes how you see this whole decision. Look back 10 years. Someone who bought the average home in 2016 locked a monthly loan payment of around $900, and it has not moved since. The renter next door started around $1,300, but has paid more every year, and now sits well over $2,000. Now, this is what the people who forecast this for a living actually expect. Mortgage rates staying around 6.5% into 2028, no real relief. Home prices slowly rising, and rents climbing right along with them. So the wait for rates to drop plan most people are counting on? The institutions don't see it coming. Whatever you decide, decide on the numbers as they are, not the ones you are hoping for. And a fact worth stating plainly in both directions, that loan is not free. Over 30 years at these rates, you pay it back close to twice. Once in the amount you borrowed, and again almost the same amount in interest. That is the real price of borrowing. Renting has its own upfront cost, too. In much of the country, a landlord can ask for the first month, the last month, and a security deposit before you get the keys, which can add up to 3 months' rent just to move in. And you get no control. You cannot renovate the place the way you want. You can be asked to leave when the lease ends. This comparison tells you there are real costs on both sides. So how do you actually decide? Here is what I would take into account after spending years assessing whether people could actually afford a home. And it is not, which is cheaper this month? It comes down to 2 questions. The first question, how long are you going to stay? Buying carries large one-time costs that renting does not. Closing costs, agent fees, moving costs, and usually thousands more to furnish and set up the place, which many buyers end up putting on credit cards or a loan. Those costs only pay off if you stay long enough to spread them out. The rough break-even is about 7 years. Stay less than that, and the math almost always favors renting, no matter what the market does. Stay longer, and buying slowly pulls ahead, because your loan payment holds steady while rent keeps climbing. The second question, can you afford the 3 costs that sit on top of the mortgage payment? This is the one people get wrong, and it is the whole reason the earlier comparison was broken. Your rent only ever competed with the loan payment, the $2,000. But the moment you own, 3 more costs stack on top of it: the property tax, the insurance, and the repairs. In our example, that was nearly $900 a month, on top of a loan payment that already matched the rent. So the real question is not, can I make the mortgage? It is, can I carry the mortgage plus those 3 and still absorb an unpredictable expense? This is a really important fact that most people don't pay enough attention to, and it affects them later. The rule the banks actually use to judge your housing cost is 28% of your gross income, the money before tax, the money you never actually see. Against your take-home, that same limit works out closer to 40%. That is why so many people who technically qualify still feel stretched every single month. On paper, they are at 28%, but in real life, it is nearly 40%. So if you cannot carry those 3 costs comfortably and hold an emergency fund to absorb the bad month, and I made a whole video on exactly how much that fund should be, then you are not ready to own yet, no matter how close the numbers first looked. Subscribe for more practical money decision videos that will help you improve your personal finances. I put out one of these every week. Now here is the part no slogan can capture. The right answer is different for different people, in different places. In an expensive coastal city, buying can cost thousands a month more than renting the same home. There, renting and saving the difference usually wins. In much of the Midwest and South, it flips, and buying is genuinely cheaper. because prices there never pulled away from local incomes. And it changes with your life. If you are single and likely to move within a few years, the 7-year math points to renting. If you are a family planning to stay put for a decade, wanting the space and stability, it points to buying. The costs and the questions do not change, but the answer they give depends on your own numbers and on how long you plan to stay. So the next time someone tells you that renting is throwing your money away, you will know the honest answer is, it depends. It comes down to 2 questions. How long are you going to stay? Because the one-time costs of buying only pay off over enough years. And can you carry those 3 costs on top of the mortgage in a normal month and still absorb the bad one? Answer those 2 honestly on your own numbers, and that will lead you to the decision that is right for your situation. Thank you for watching. Subscribe, and I will see you in the next one.